Hi everyone, and welcome to Learning Objective 2-1. So in this learning objective, we are going to set out to understand available internal and external data sources and how data are organized in an accounting information system. So when we perform accounting analytics, one of the first steps, so after we've asked the question, we've formulated a good question, we've identified the business problem, and we've identified a specific question that is narrow and answerable, our next step is to go out and get data. So where can we get data? Well, if we're talking about a company, often the first stop is some type of database that is within the organization. So an internal data source. And so things like enterprise resource planning systems, ERP systems. You in your accounting classes you might have encountered SAP. SAP is an ERP system, enterprise resource planning system. Enterprise systems, these are sometimes called enterprise systems. So it's a category of business management software that integrates applications from throughout the business. So it might integrate things like the accounting system, the finance system, the human resource system. So it's a centralized repository for all the organization's information. And the advantage of centralizing the storage of this information is that anybody in the organization can access it, and then ideally, if everybody is accessing the same information, everybody in the organization is on the same page. Accounting data can also come from a second internal source, what we call an accounting information system, AIS. So we actually have a class on AIS in LaSalle's accounting program. And so an AIS system records, processes, reports, and communicates the results of business transactions to provide financial and non-financial information for decision making. All right, so the AIS system is where we record our accounting transactions, where we book our journal entries, where we extract reports so we can analyze how the business is doing. Where else could we go internally within our organization to get accounting data? Well, we could go to a supply chain management system. So a supply chain management system includes information on active vendors, like their contact information, where we should make payments when we buy from the vendor, how much should be paid, so all the invoicing related information, that accounts payable type of information. And then when we track orders that we've made with the vendor, how much, what was the quantity, what was the price, and then it allows us to manage our demand schedules. When do we need product from our suppliers? So if we are performing inventory analyses within accounting analytics, or if we're examining what we think our cost of goods sold will be going forward, we can go to our supply chain management system, our SCM system. So far we've talked about, and these are all internal sources, we've talked about enterprise resource planning systems, ERP systems. We've talked about accounting information systems, AIS systems. And now the third is supply chain management systems, SCM systems. Now there are two more internal information sources. So the fourth here is customer relationship management systems, CRM systems. And you might have heard about this. So a CRM system is an information system for overseeing all interactions with current and potential customers with the goal of improving relationships. So we're going to keep track of all of our interactions as an organization with potential customers, with existing customers, because we want to keep the customer happy. And then finally, the fifth internal source of information here in accounting analytics is a human resource management system, an HRM system, human resource management system. And so this system will have information for managing all interactions with current and potential employees. So when we go out and we're searching for a new employee to fill a position, we're going to keep track of an applicant in our HRM system. On the flip side, we're going to keep track of all of our employee information in terms of salary, benefits, bonuses. All these things are going to also be kept track of in human resource management systems. Let's talk now about external sources of accounting information or accounting data. Now, I mentioned at the beginning of this video that often our first stop is going to be some internal information source to perform accounting analytics. But sometimes it benefits us as an organization to go out and gather what we would call external data. And when I say external, it's data that's external to the organization. It's data that's tracked outside of our company. And so you could go to, for example, you could go to the Bureau of Economic Analysis website and you could download data on the economy. You could download financial statement data from the Securities and Exchange Commission's website. You could go to peer lending data. So there's data on peer-to-peer lending. And we'll see some of that data in this course. We can get data from cities. Like, believe it or not, the city of Chicago has all of their financial data available online for free. And so there's lots of different places we can go to kind of supplement our accounting analysis that's based on internal accounting data. So in most cases, you're going to perform analyses using internal accounting data, but sometimes it makes sense to supplement. So for example, if we're examining our gross profit margin, maybe it makes sense to go out and look at the financial filings for one of our key competitors and see what their gross profit margin looks like. Who are their suppliers? Who are they buying from? Can we buy from that supplier also and get a better price on our supplies that we need for the business? Okay, so that's the idea here. We're supplementing what we have internally. So let's conclude this learning objective by talking about accounting data and accounting information systems. So it's important for you as an accountant to have a basic understanding of accounting information systems and the structure of accounting data. How data is organized. How is it set up in our system, in our accounting information system? So most commonly, data is either stored in what we would call a flat file or in a database. So a flat file is a collection of records. So think about a Microsoft Excel file. And each row of the Excel file is what we would call a record, and then each column is what we would call a variable. So you have a single observation, a single record, and you're measuring a bunch of different variables for each record. For example, a sales transaction. You might gather, for a single sales transaction, that would be one record. You might gather the time of the sale, the location of the sale, the products purchased, and so on and so forth. So one record is the sales transaction, and you're collecting multiple pieces of data, variables, so what we would call variables, the columns in an Excel spreadsheet for that sales transaction. And so a flat file is a collection of those records, a collection of those sales transactions, in which the data follows a uniform format and follows rules on value types where applicable. All right, so a database is what we would call a flat file because every line of that database, every record in that database holds one and only one data input. So the most common example of a flat file or a database here is an Excel spreadsheet. So when you hear the word flat file, database, you should be thinking about how data looks in an Excel spreadsheet or in a Google Sheet. So put simply, a flat file is a means of maintaining all of your data in one place. All right, so we can do a lot of great things with spreadsheets, Microsoft Excel, Google Sheets. So we can do a lot of great analyses with these tools, but they're not always the best tools for storing data. And why are they not the best tools here? Well, because it's so easy to manipulate values, so easy to change values in a spreadsheet. You can simply type into a cell within Excel and change the value in that Excel sheet. Now, you might not always want that to happen. You might want to have a centralized copy of your data so that you know that it's trustworthy. There are no mistakes in it. People have not changed values in the database. And so in this situation, you might want to create what's called a relational database. So what is a relational database? A relational database is a type of database that shares and provides access to data points that are related to one another. So relational databases are used on a relational model, which is an intuitive, straightforward way of representing data in tables. So think about this as you have multiple Excel spreadsheets. Now they're not going to be stored in Excel, it'll be stored in some other type of software like SAP, right? SAP is an ERP system which contains the accounting information system for an organization. So think about a bunch of Excel sheets that are, they have rows and there's columns, and each sheet contains different types of data. There's different subjects for what is being collected. So maybe if we're talking about accounting data, maybe one sheet contains data on all of your property, plant, and equipment assets. And a second Excel sheet has information on all of your prepaid expense assets. And maybe a third sheet has all the liability information. And sometimes maybe you want to put these pieces of information together. You want to do some type of ratio analysis like you learned in your finance classes. Well, if they're in separate Excel sheets, how can you perform these analyses? Well, there is always going to be a way to link data across tables, across sheets in a relational database. So there's going to be a common identifier, what we call a primary key. There is, say, if we're talking about, an asset, maybe we're measuring assets at multiple different periods of time. And so the key here would be the date at which the asset has been measured. And you want to match that asset with the measurement of a liability for the same period so that maybe you can calculate something like the current ratio. Current ratio is current assets divided by current liabilities. So you want to pool the current asset data for this period and match it with the current liability data for the same period, and you're going to tell the relational database, hey, match these two things based on the date at which they were recorded. Okay, so that would be what we call a key, right? So this is a relational database. We're relating multiple tables with a common key. All right, so in this learning objective, we talked about different sources of accounting data for accounting analytics. We talked about internal, external sources, and we concluded by talking about flat files and databases and relational databases. So hopefully you found this video helpful. Thanks for watching, and I'll see you real soon. Take care.